Las Vegas neighborhoods are quietly being scooped up by big players like AMH. But what does that mean for individual investors like you? Let's unpack the pros, cons, and strategies for competing with an institutional landlord. Let's start with who is American Homes for Rent, or better known as AMH, their ticker symbol. AMH is a publicly traded real estate investment trust, better known for their build-to-rent strategy, meaning they build communities specifically for rental purposes only. AMH is headquartered in Las Vegas, and as of March 2025, they have $13 billion in assets under management, in which 4% is properties located in Las Vegas. Let's start with the pros. Institutional confidence validates the Las Vegas market. I often say institutional investors spend a lot of money employing specialists in data and analytics, finding markets with the highest potential. In terms of population growth, economic opportunity, and demand for single-family housing. Their research team often don't miss the mark, so purchasing in the same areas and markets is usually a great indicator. Let's talk about the cons. They will be your direct competitors. When listing your property for rent, they will be your direct competitors, especially if they own a large number of homes available in the area. Especially in their build-to-rent communities, they often release large blocks of properties available for rent at one time. When there's a large number of inventory, they may do special incentives like 1 month free rent or lower the rental price, so keep that in mind. Resale value. Being near a for-rent community is less desirable, so in the long run, it may affect your resale value. I don't think it's necessarily a bad thing to buy in the same community as AMH. There are a lot of AMH communities in the Southwest, Cadence, and Spring Valley area. Being in that general community is fine, but you don't necessarily want to buy a home directly across the street from an AMH community. Let's say you already have a property and it's very close proximity to an AMH community. How do you have a competitive edge over them? I would look into upgrading the interiors, maybe better backyard landscaping, or more unique properties, because AMH communities can be quite cookie cutter and builder grain. Something to also keep in mind is that REITs often have higher risk tolerance and bigger pockets than regular investors like you and I. Publicly traded REITs are subject to quarterly earnings, so sometimes they'll forego long-term profits for short-term gains, and it's not a great position to be in if you as an investor have different goals. I've had a lot of investors purchase in the same subdivision as AMH and haven't seen any changes in market demands for their investment properties. However, we've always been extremely strategic based on the location. If you're looking to purchase an investment property and want a competitive edge over an institutional investment trust, I'm Shawna, your investor specialist. I love to help. You can find all my contact information at thethomasgrouplv.com. I'll be at extension 9, and I'll see you in the next video.